Hey traders, this is your trade recap for the Sector Secrets Mastery for May 17. It's about 20 minutes before the bell closes. Let's go ahead and do this wrap up. We're going to kick it off with the Freeport-McMoRan trade. This is a swing trade that we put on Thursday. So just a quick recap. This is the original alert that went out, and we wanted to buy Freeport-McMoRan, the 52 call, May 24th, so next Friday's expiration. The aggressive trigger was 52.61 so you could have chosen to forego 52.61, use 52.45 as a trigger to buy the 52 calls, or lastly, the 52.24. All three of those levels were touched yesterday, so everyone should have, to some degree, a full complement of those 52 calls from those three triggers. Now, if you're new to the trigger concept, and you're saying, Rob, what does that mean? Really simple. No trigger, no trade. What's the trade? To buy the 52 call. What's the trigger? When price reaches the 52.61, 52.45, or 52.24 level. Now, let's say you're thinking to yourself, Rob, this is a swing trade. I have a job. I might be doing other things. I've got some appointments. So this is what we teach in the Sector Secrets Mastery. So first of all, the entire trade idea goes out at one shot. You know exactly what I want to do and where I want to do it in one full, complete alert. Now, the other part of this is not all the triggers are going to be reached at the same time or even at a convenient time. So what I like to do is I like to use this handy dandy thing, the good old phone where I've got either TradingView or my platform, my broker's platform running. Maybe it's Tasty you have running on yours. Maybe it's Thinkorswim. So what I do is I will place an alert 5 cents in front of each one of those triggers. So it works like this. I'll park an alert on the platform that I choose to use. TradingView is usually what I like, but Thinkorswim or Tasty Trade is perfectly fine. So I'll place an alert so my platform pings at me. I get an alert on my phone, 52.66, 52.50, and in the last one of the 52.24, 5 cents above, 52.29. If you want more than 5 cents, 7 cents is cool, but don't make it too far ahead, because what's going to happen is you're going to cheat your entry, right? You're going to get in a little too early. As close to 52.24 as possible, but be aware when it comes down to 52.29. That gives you a little preparation to head on over to the options platform, take a look at the bid, take a look at the last, and send that limit order to buy in. And that's easy enough to do on a phone, because all we're doing is buying long calls, long puts, and a cash account. We keep it really simple. All right, so where are we now? One of the things you might have noticed is sometimes, especially on an options expiration Friday, we'll put in some optional targets. So you can choose to either pay yourself, scale out of 1/4, 1/3, up to 1/2 of your position. And we gave the choice of 53.30 or 53. Now, for a lot of our traders, they'll say, you know what, Rog, I'll use that 53 to move my stop to break even, which means no more than risk down to whatever you paid for the option. I paid $1.44 at the agro, $1.30 at the moderate, and $1.20 at the conservative. So I have 3 different break-even stops. $1.44, I'll give it about a nickel of wiggle. So that could be $1.39 to $1.44, $1.25 to $1.30 for my moderate, and finally $1.20 to $1.15. So I'm not risking any more than about what I paid. No max debit. You nor I hate our money, right? Okay. So when we get to that level, we can move to break even, and then we have the choice whether or not to scale out. Now, if you used an optional target, you scaled out at either about $1.70 or $1.83. Notice what I'm talking about with scaling out. That's something unique we do, which is get in at 1 to 3 levels and get out at up to, say, 2 or 3 levels. I have a T1, T2, and T3 usually in mind. So the T1 is the most important. T1 is the first step in your risk management, right? Okay, so now I can take the optional target if I want, or right now these options are trading at $2.60. So if you said, Rog, I haven't scaled out yet. I know the scale out was 54, 53.97. Look, it's Friday, it's OpX. This is a nice day. We've gone from the gray zone of the Freeport-McMoRan, the gray daily price movement range, volatility zone. We've gone from that price movement range up to the top. pay yourself while you can, not when you have to. So that's a nice move up to $2.60. And then that leaves more of this position open to follow through next week and or a break-even stop. So this is how we only risk house money or unrealized profit. And at this point, we should be down to about half of our position. All right, that is Freeport-McMoRan. I hope that thorough walkthrough makes sense and it gives you an idea of how I trade. What I share with you all in the room is how I trade. We have to be able to set up an idea in a complete way so that if we do want to step away or have to step away from the screens, we can still manage with a proactive alert. You're not waiting on me to tell you when to get out. You've got the entire blueprint for the trade from the get with that alert. All right, the other trade is something we did in the Mastery today, and that was a play on gold futures and or gold. Let's walk through that. So this was the day trade we did today, and let's open up the 5-minute time frame. The 5-minute time frame is what we use for those day trades. And let's open this up. Okay, so 5-minute chart. The idea here was that gold this morning was one of the few trends that we had. And how do I gauge a trend? I use my multi-structure. See that green over green, green momentum, green trend, right in there. That's a beautiful mean reversion trade. What does that mean? I'm waiting for the pullback to the zone between the green, yellow, and red line. I would have been fine if we got down to the red line because that would have been the hourly price movement range, the PMR down there, that price movement range based support. And in this case, on gold, I'm just looking at my notes here. So on gold, we bought initially at $1.76 or $176 per option. Remember, gang, we're always thinking in multiples of. So if I'm looking at a $1.76 option and I've got a budget of, say, $3,000, I'm buying $3,000 worth of those $1.76 options. So I'll show you the notes that set up that particular trade so everyone gets an idea again of how we day trade. So here it is. So very similar to what we did with the swing, right? You know what you're buying. You know when you're buying it. So the choice here was to either go with 2400 right there, 2400.5. So basically the major psychological level. We are now 20 points above that. So if you chose to go with the GC futures, that's one way to go. Or if you say, Rog, I'm not a futures trader or I'm not ready to manage that kind of leverage, let's take some baby steps into trading futures, micro gold or the GLD, in this case, the 220 call. Again, the first scale out was $1.76 to $2.41. And if we take a look at that GLD chart, now please don't set up your trades on GLD. Set them up on GC futures. So what you're able to do is say, look, I could trade GC, I could trade MGC, or I could trade GLD. And this is where I think for a lot of traders new to futures trading, start with the micro or start with the ETF alternative. This is what we call choose your own adventure in the Sector Secrets Mastery. There are lots of different ways to take this idea of gold futures being in an uptrend and executing it in a place where you can manage risk and manage the leverage. So at 220, the 220 call, again, we paid $1.76 for these. As we're wrapping up the day, remember, this is a day trade, so I want to close it. They're going to expire today. I don't need GLD shares in my life. These are trading at, right now, $3.50. We scaled out at 176, scaled out at 241, and as we're about to close 350, that Fed candle is when I like to call it a day. I'm going to finally scale out of the remainder of my contracts here at $3.50. So 176 to 350. Not a bad day between our swing in Freeport and our day trade in GLD. And keep in mind, you can manage multiple types of trading, short-term day trades, short-term swings, and overnight longer-term swings. When you understand that the same type of mentality, focus on the trends, find those price movement range support levels, and then take advantage of a trend because the continuation is most likely to be there. And that's exactly what we did. Hope that helps. If you have any questions, leave them below. I always check the questions and comments on the videos, and I'll see you all in the next update.